Yes, this is Helen Rose, and today we are meeting with Dan Nail. He is a commercial banker, and our discussion today is that we are talking about how to get a loan. What do you need to do to prepare for a loan? And Dan's going to guide us through some of that and share some of his expertise. Dan, we appreciate your time. Welcome, first of all.
Thank you, Helen. Thanks for having me today.
So, Dan, can you please tell us a little bit about yourself and the uh, bank you work for?
Sure. As you said, my name is Dan. I am a commercial banker with a local bank called ACNB, stands for Adams County National Bank. We are a smaller bank, but we do a lot of things that may not be the same as bigger banks, as in we really kind of find a little more things about what businesses are doing. We're very involved in the community. I've been with the bank for about a year. I have about 12 years in banking experience. I've been involved in sales for over 20 years. I've graduated from Shepherd College, now Shepherd University, with a dual major in psychology and communications. They may not translate into finance, but I was really big into finance and self-education. I got into law school, decided not to attend at the time to get back into sales. And I've really just enjoyed doing this, helping people, business owners, and consumers really manage debt, help leverage lending, and really kind of grow their finances.
Excellent. Thank you so much, Dan. I have some questions for you. Um, as entrepreneurs and entrepreneurs, they are looking to start businesses. Many of the students are in the early startup stages. Some of them do have businesses already and they are trying to scale. So we're going to have some questions that try to help both groups. Um, but just to understand the process, because we all know that when it comes to funding, there's a lot of questions and there's a lot of fears related to it. So we're trying to, like, if they're empowered with information, it becomes less scary.
I agree.
So the first, the first question. Um, so if they want to qualify for a bank loan, you know, what do they need to qualify for a bank loan?
Yeah, that's a great question. I know we've had some discussions about this before. I always tell people it starts with the person. And it really starts with if you're applying for a bank loan, whether it's business or consumer, they're going to look at you personally as a credit applicant. I always say, to get started for a loan, whether it's a car loan, whether it's a credit card, whether it's a business loan, whether it's buying a house, that you need to have your finances in order. Whether you're new into the business or new to life, there's a couple things you can do to prepare. I would say one is you want to make sure your credit is right. I know that's a touchy subject these days on what credit is, but credit is really a great measurement of how you spend your money and how you repay it. And the best way I can say is you never want to spend more that you have at home because what happens when an emergency comes up? So I would say for applying for loans, you want to make sure you have your credit score up. If you were to apply for a loan and you don't have any credit, it's going to be really difficult to get a loan. Some people start out with when they get their first car when you're in high school, you may co-sign with your parents or a relative. That's a way of kind of starting your credit or starting your first ever college credit card. That's another way of establishing credit. So when you're going for a loan, you need to establish credit. And the easiest way to do it is probably either on your student loans when you first sign off for them or a credit card. That's the first steps because you have to establish that before you can actually get the loan.
Okay. So let's talk about preparing. So if say these students are thinking about, they're in the planning stages right now. And so they're in college, they might not be planning to start their business, in the next 6 months or a year. Maybe it's about 2 years down the line. So what can they be doing now to prepare for asking for a bank loan when they really need the funds in about 2 years or sometime in the future?
There's a couple things. One, find a way to make income. I would try to find the best way to make income now while you're in college, wait tables, social media, whatever it is you're doing, you want to generate some income so that you actually show that there is cash flow coming in because your highest revenue generator is your income. It's not a theory, it's fact. Your income is gonna be your highest revenue generator. So when you're preparing something within 2 years, I would have a plan on what you're doing, knowing what type of business you want to get into. A great idea can turn into a great business idea, or a great idea can turn into a complete flop. So prepare, have a business plan. If it's an industry that you're really interested in, talk to a professional that's already been doing it for a while because they've already seen what happens. And so they can tell you what's going on from there. I think that's the one thing I wish I'd paid more attention in my youth was ask people in the industry what they did to be successful and how they were to hold that business going because they're the ones who've been doing it. There's no real reason to reinvent the wheel. You may want to expand on it, but you want to keep following what people in the past have done because that business was there probably before you and I were even born.
Mhm.
So I would talk to industry experts first.
Very good. I totally agree with that. What about business plans? What do you think? Should they be working on a business plan? How do banks look at business plans?
Well, I think it depends on the situation. If you've been in business for a while, let's say 5 years plus, business plans may go in there. If you're going into a different industry, yes, you might want to have that more in place. But if we're talking to true entrepreneurs who are just starting out, you need to write down not only your ideas, but how you're going to be able to fund them. And I always explain that a bank can help fund you, but you got to give them a good reason for them to want to fund you. Not just because of you're likable, not because you've got a great idea. You need to have tactile evidence on why they should be lending to you. And the first step really is establishing credit because if you don't have credit, there is no way a regular bank's going to fund to you. So I always did that when I was a branch manager. I've always done that. And this is, I don't mind having a credit discussion because that is the basis on how you're going to get lending. It's not going to build your business, but it is the basis on how you get the lending to expand and possibly build at that point.
Very good. Okay. So, what about understanding their business score and their financials? As a business score, what are you looking for from a bank, as a bank?
Well, business score can be a couple things. One is your credit score. So you'll hear people in the news say, "We'll accept any credit. We'll do this." You want to keep your credit score above 680, and the scale goes from like 300 to 850. And you're not going to be an 850 when you first start out. You're probably going to be closer to like 600. It's just what it is. So it's keeping that credit score above 680. And the best way to do that is keeping your credit utilization to under 30%, making your payments on time. And the two things I stress is don't miss student loan payments, don't miss mortgage payments, don't miss car payments, and do not miss medical payments. Unless it's an absolute necessity, do not miss those payments. Those are the biggest factors that will drop your score by 20 to 50 points. The other part I look at is cash flow. When I say the word cash flow, it's what's coming in, what's going out, and how consistent is it? And is the cash coming in higher than the cash is going out? Because that is the one factor I think a lot of people think about is they want to buy all these things, but do you have the cash coming in to offset that? And you want to have a little bit of a cushion in between. You always say have that safety net, have that, that savings. You need to have like a 20 or 30% ratio of keeping between what goes out and what comes in, and what comes in needs to be about 20% more.
Okay, very good.
Uh,
So we're, to summarize, um, establish credit and make sure you pay your, pay on time. And especially the ones you highlighted have the bigger negative impact to your your credit score. Have a plan, especially if you're brand new. Have a business plan. Make sure you document, you know, what your business is doing, what your market is. Document those financials, how you are getting revenue in, and where clearly what you're expecting as your expenses. Um, Savings. Save now. Anything you can, so you can either self-fund as much as you can or be able to have funds to, because the bank isn't going to give you a loan for everything, you know,
no,
right?
and I've turned down people for commercial loans that had a good credit score, but they didn't cash flow. You could have 1 million in the bank account, but if the business isn't, generating revenue, it's going to be really hard. At that point, I've had that discussion before. So
And okay, so that's a great point too. If you can get started, well, first of all, make income yourself, you know, but as your instructor, I will say you can start making revenue in your business if you start small. You might have a grand plan, and I get it. Okay, that's beautiful. But there might be something you can implement that you can start showing that your business is making money right now or very soon. You can always grow your business, but the sooner you show some revenue coming in, you're, am I right, Dan? Is that establishing some
Yeah,
credibility there?
I agree. You need to have some sort of income coming in, and a lot, 9 times out of 10, your startup business isn't going to do it. It's especially when you're young in college, high school. I know my first job was, um, bacon bagels at a bagel shop and waiting tables. I mean, that's how I kind of started generating revenue at first, and that kind of helps funds other things. So that's part of it. I think the other thing that people misinterpret is, you hear these things on social media and like, oh, you can do this, you can avoid the bank. I said, if you have other sources of income, and we can talk about sort of like owner financing, find a business that you're looking for where an owner can finance it and they can maybe give you a better rate, or they're trying to sell the business. There's a lot of business owners right now that are looking to retire. And if you're in that industry, it's not a bad idea to go after. And that's something I always bring up.
That's a
I
very
also,
good point. There's a lot of baby boomers are retiring right now, and they just want to retire. It might be a solid business, and they might not be looking for, something grandiose, or they might be willing to, help finance, the buyout, like buying out over time. So there are deals out there. Um, Dan, you bring up a good point, like, um, your startup might not, it isn't going to necessarily be where you get your money initially. I know with each of the businesses that I've started for probably the one that we had the longest, Natural Zing, my husband was starting it. He started it for 2 years, and I was working in the corporate world, having a director level position where I was bringing in money to pay for the household expenses until he got that up and afloat. Same thing, he did the same thing for me. Natural Zing supported when I started my cafe, and and I guess we both been supporting each other, you know, as we've started our next businesses. So goes back and forth. So um, I think a lot of people do that. It could be partnering with somebody. It could be, I'm not saying, oh, get married so you have some funds, but it does happen that way sometimes. You fund each other, and it could be a family member, and it could work out that way, or it could be a nice, good partnership. So in any case, you do need funding coming from somewhere that will help. So start saving. Let's see. I have more questions. How does a bank evaluate a business plan and financial projections? What are you looking for there?
well, I think they look at history first. And if it's a startup, they got to see funding. That's the real thing is you're coming to the bank funding, but you need to have some sort of injection. And I've always said that most businesses, whether you're buying it or buying a type of business property, you need to have 20% down. It's a little different than a personal home. It's a business. And with that being said, if you don't have the 20% down, you're gonna have to do a minimum of 10%. And there's something called an SBA loan, which we can discuss at some point, and it's a little more complicated, but it's designed for those that don't have quite the capital for the down payment, but have a good business plan. They have the 10% down, they've got the plan. And a lot of that plan should be like, do you already have clients set up? Do you have contracts ready to go in place? Do you have people ready to use your product or service? If you don't, it's going to be a little difficult if you don't have that on the plan. And I've always said when I've talked with people who come to me for loans, whether it's buying a property, whether it's buying a business, I need to see the business plan. And if you're buying an existing business, you need to see the business financials on that. Is that business profitable? Do you have something to offset that will make it more profitable than maybe it was? So there's a lot of different components. I think for the business plan really is having a startup injection, and that's you need to have some sort of a down payment. There's not really zero down payment loans unless you have an alternative source of financing. And the other piece on the business plan is, do you have the other things in place that show that you're not going to be a business that fails? And I'm not saying that all businesses are guaranteed, because they're not, but you need to have something in there. And also industry. I think a lot of people don't talk about that, is there are certain industries that banks look at not as highly as others. So think about that as well. And there's a lot of information on what banks don't like to lend to, but if you've been in that business for a long time, it's a different story. But if it's a business where it's really kind of a whole new niche, you got to have some really good staking grounds on why the bank should lend to you, or anybody at that matter.
Yeah. Yeah. I think any investor, or whether it's a bank, you really are making an investment with the loan. Um, it's, the level of uncertainty. If it's uncertain industry, if the market's shifting, if they feel uncertain about that, if that business plan doesn't give a strong sense that that entrepreneur knows what they're doing, knows the market, knows the industry, has a plan of action, then there's a lot of uncertainty. So people are not going to lend you money if they don't feel there's, yeah, this is going to happen, you know.
I wanted to mention something about that. If anybody's watched that show Shark Tank, that should be a prime example of why people invest in others or why they don't. And I think that's something that's overlooked. I mean, it's Hollywood, there's a lot of things to it, but pay attention on who buys in. And I always said, if you watch American Idol and you watch Shark Tank, everyone wants to win Simon Cowell over on American Idol or America's Got Talent, or they want to win over Mark Cuban on Shark Tank, because they're the toughest ones to win over. And if you haven't seen that show, watch it. I think you'll understand after what I say after you see it. So
Yes, I love that. That's one of my favorite shows. Okay. What financial documents does a bank look for?
hmm. Well, for a business loan, we usually look for 3 years business and personal tax returns. Now, if you start a business, obviously it's going to be really hard to have 3 years of business tax returns because you're just starting up. So they're going to look at your 3 years personal returns. Um, they look at your bank statements. They look at something called a personal financial statement. And what that is, they're going to require you to fill out something that shows all of your assets and all of your liabilities that you personally have. And if there's some sort of negative discrepancy on there, that can raise some red flags. But that's why I always go back to the point of having your finances in order, even if you're not comfortable or if you're a little bit behind, have it in order, because they're going to look at, are you a good candidate? Are you paying on time? Have you saved? Do you have a backup plan? And I always say this: reserves. There's nothing wrong with having some reserves. And I speak to all the entrepreneurs out there. I understand. I'm married to an entrepreneur. And I have this discussion with my wife all the time, and I love her to pieces, and she's done very well. But there's a reason why our partnership works, is because there's always going to be someone who's the dreamer, the thinker, always going things, and they've got great ideas, and they probably can be very successful. But you also have a reason why you have someone to be a little bit conservative on there, because they're going to help keep you out of trouble when you're thinking all the big ideas. And another thing I always tell people is hire an accountant. Always hire an accountant, because remember, they're the experts. Not all accountants are correct, but I would do your research and hire a good accountant, because that will keep you out of trouble. And if your business does take off, there's a wonderful thing that goes out there that, as business owners and as employees of the world, though, is taxes. Now, I'm not a tax expert, but you got to put aside money for that. And unfortunately, it's one of those things where it's just part of life. Helen, you can attest to it. I can. You always got to account for the taxes, and everybody's going to be in a different situation. So,
Yes, yes. Always keep the tax man in mind. Yes. So, okay. Oh, this is a tough one. So, what happens if their business fails and they can't pay the loan? What happens?
well, there's a couple things that happen. And unfortunately, I've seen some of these, and I don't wish this upon people at all, but there's an accountability standpoint at this point. If your business fails, I think a lot of people say, oh, it'll be under the business, not under you personally. Well, I can guarantee you that personal guarantor on every loan you ever do, very rarely, unless you're a huge conglomerate, it's still going to go back on you because it's an accountability thing. If your business is failing and you see it failing, there's a couple options. One, find another way to bring up an income if you can, whether it's having a separate job that can fund it, whether you have a family member that can help you out. I'm not saying you have to go rely on your family members, but I am bringing it up as a point of if you can avoid failing or you can avoid folding the business, do what you can legally and morally, but at the same time, find a way to, if it does fail, worst case scenario, what happens is if you have a loan and it's not being paid, yes, your credit's going to take a dip. Yes, you're going to be sent to something called special assets in a bank, and that's not the place you really want to go, but I've dealt with that, and sometimes things can happen. For those of you around for the 2008 crash, you'd understand. And what I tell people is at this point, it's like you do what you can to survive. There's other ways you can do it. I always say, people ask us all the time, what about bankruptcy? I think that's the last resort. There's 4 or 5 different types of bankruptcy. I'm not a bankruptcy attorney. If you come to that point, I'd hire one, at least speak to one, because they're the ones going to advise you that I'm not a tax professional. I'm not a legal professional. I'm a financial and lending professional. So hopefully that's there. It does happen. But that's why we asked for the plan. That's why we asked to have these reserves. It's to prevent you from putting those situations.
Yeah. So that does get us, the risks involved. So you hit on this is that nowadays that when you ask for a loan or when you're getting credit with a supplier, or especially, I know this, when you get a commercial lease, you have to personally guarantee. They're not going to give you that lease, give you, that loan unless you have a personal guarantee. That means not you as the business guarantee it, but you as the person, and that means your personal credit in your personal, assets are on the line. So tell us more a little bit about that. What's your thoughts?
Are you talking about with the personal guarantee?
Yeah, like, what, well, not your thoughts on it, but, like sort of, and am I right on this? They do ask for personal guarantees that,
I have not done one
else.
loan yet. That's not a personal guarantee. The only time they don't ever ask for personal guarantee is on a nonprofit or a church or a huge conglomerate. And then that's a different discussion. So I've definitely dealt with nonprofits and churches, but they ask for some other things when that comes along. And if you are thinking about doing that, then that's a different discussion because it is always going to be someone's going to have to take on the liability for it.
Mhm.
So
Yeah. Okay. Let me see. What questions have I not asked? Oh, there's more. Okay. Oh, how long does it take to get a bank loan? And I know it varies, but share with us, some of this information.
So the shortest amount of time loans are probably vehicles, maybe a business acquisition, a business line of credit, um, a business loan that's not tied to real estate, probably within 3 weeks to a month. When it comes to commercial real estate or anything that needs to be built or built out or construction, I would say for commercial real estate, I always do 4 to 6 weeks. If you've already owned a home now personally, it can take about a month, and the real reason why is the appraisal. And I always say if you're buying a property, you're not leasing the property. A normal residential appraisal can go anywhere from like $400 to $600. A commercial appraisal can go from $1,000 to $3,000, and it takes 3 weeks to get done, whereas a regular appraisal may take only a week. So that's where I factor in the extra 2 to 3 weeks just in case. There's also fees associated with it. They have to get environmental, like if it's a garage or something that may have held tanks underneath, which was very common back in the day. Environmental can go anywhere from $500 to $2,000. So that's already right there on the high end. You're going to be in if you're buying that type thing, that's $5,000 just for
Crazy.
buying the property.
Mhm.
And so that's something that needs to be accounted for. And I explain to anybody who's applying for a loan with me for that, it's like you got to put that into effect because you never know.
Yeah, very good. Okay, good. Um, okay, so you definitely covered, the shorter side, the longer side. That's good. I wanted to bring up to the students that, you know, if you're looking at different funding options, I mean, at least there's a bit of a a sense of how long with the bank you're going to get a yes or no at a certain period of time. You know, when it comes to grants, the process is much longer. It's highly specific. You have to meet lots of requirements. It varies by grant. Okay. Um, you don't have to pay it back, but it's, even some simple grants that I have gotten, um, that don't equate to a lot of money have taken like 3 to 6 months. And you're like, why should it take this long? Well, you know, it's a grant. It's a different process. It's totally different than asking for a loan from a bank. And then I do like investors, but we've talked about the risks in class about those. There's lots of different things going on, and there's definitely no guarantees with that either. And it could be a long, drawn out process and because you've pitched. When are you going to hear back? Do they have questions? That could take several months as well. Um, or at least even sometimes to get onto the radar to even get in to see them. So there's I guess, some more predictability with banking. At least you're going to get a yes or no in a given period of time. So, okay. So I think I have more questions. No, I covered that.
One
Okay.
thing to add is that when if a banker does tell you yes or no, ask them to tell you the reasons why. And usually they're going to give you a formal paper that doesn't always explain it. Ask them to tell you why. And
Great.
then I always say whenever I've turned someone down for a loan, not everybody asks you what they can do to do it, but when they do ask, like, what can I do to not get turned down again? You need to clean this up. You need to take care of this. And then I go through it so that I explain them like why and then how long would that take? Well, it may take 6 months to a year, but I'm going to give you the reasons on why, and then it'll help you for the next time when you do it. If you do apply for the loan again, this will help your chances.
Excellent. Excellent. Very good. So remember to ask why. Okay. Any other tips that you would like to share with our students?
I would say because for your student and the generation they're in, a lot of you use your smartphones and are on the tablets and whatnot. Good budgeting tool. I would use something called Mint and download that app. It's free. There's a pay for it. There's free. It'll help you if you want to connect your bank accounts and your loans. It'll tell you exactly how you're doing. On your it's almost like your own personal financial statement. I use it every day. It keeps track of all my accounts and it tells me where I am. It even tells you what your net worth is, which is something you can talk about another time. But it'll help keep you in track of when bills are coming due. It'll tell you what's in your accounts in real time. And it's one of the most helpful things. And the other tip I would give is talk to someone who's been doing business. Well, I also have two of them. Talk to someone who's been doing what you're doing or has been in business that's done it and been successful. And even talk to someone who's failed because most business owners have failed at something in their life. I know I failed at certain things in my life. It's how I learn. Um, and the last final thing I would say is if you're really looking to really build something and you want to learn how to make sure you take care of yourself in the process, read a book called Profit First. It will tell you a lot about what you're doing because you always want to set aside for bills, taxes, insurance, everything. But you always got to make sure you take care of yourself in the process. And reading that book really opened my eyes, and not only as an individual, but as a business owner, so that you budget correctly, so that you're making sure that you're in a good position after whenever that income comes in. So
Excellent. Thank you. So now I have two notes, Mint for budgeting and Profit First. So I'm going to find that book and get that. So awesome. Dan, thank you so much for sharing your expertise. truly appreciate it. I thank you on behalf of the students. I know they're going to value this greatly. Thank you.
Well, thank you for your time, and for the students out there, hey, I wish you nothing but the best of luck, and I hope you all nothing but success.